The US dollar has lost 99.8% of its value against the S&P index over that same 100 years. That is actually a closer measure to the inflation rate. This is the world's strongest currency. This is the currency backed by the country that won every war in the last 100 years. This is as good as it's going to get for you. This is as good as it gets. It will get worse.
In a world characterized by financial uncertainty, shifting geopolitical landscapes, and recurring economic downturns, Michael Saylor, co-founder and executive chairman of business intelligence software company MicroStrategy. Bitcoin is a perfect thing in an imperfect world. This bold assertion holds merit when viewed from a certain perspective, especially as inflation concerns continue to rise amid the global economic recovery from the pandemic. Governments and central banks worldwide face pressure to raise interest rates to curb inflation and maintain economic stability. During a Bitcoin conference in Prague, Michael Saylor, the billionaire co-founder of MicroStrategy, discussed various topics including Bitcoin, the decline of the US dollar, inflation, and the future of money. Saylor argued that money is experiencing a gradual demise, evident from the recent surge in currency failures. He emphasized that even the world's strongest currency, the US dollar, is not exempt from this trend. Saylor pointed out that monetary inflation and weakened currencies have become more pronounced, with inflation rates ranging from 20 to 100% in countries like Argentina. In this video, Saylor delves into the undeniable decline of the dollar and its implications for the global economy and other foreign currencies. He explores the facts surrounding this unstoppable trend, shedding light on the role of Bitcoin in such a landscape.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
I'd like to talk about the future of Bitcoin. So let's start with an observation. There is an endless economic war raging worldwide. It has been raging since the beginning of time. It is going on right now. That war is over the redistribution of economic energy, and we call that wealth. But it is all of the money and the power in the world right now. And so we have a nice map of the wealth of the world here. And the question is, how is that wealth being redistributed every single month and every single year? There are three primary drivers. The first driver is government policy. The most powerful actors in the economic war are governments everywhere in the world. They are moving money around. When I use money here, I mean economic energy or wealth. They're redistributing it. The second big driver in this economic war is technology. It's the advent of the Apples and the Googles, and it's electricity, and it's fire, and it's cars, and it's Teslas, and it's AIs. The third driver in this economic war is work. It's all the hard work, it's the competition, it's the energy. When you get up in the morning, you go and you work as hard as you can. Now, sad to say that the government is an order of magnitude more powerful in that economic driver than the technology. And the technology is an order of magnitude more powerful than your work. And I think you understand this. If you work as hard as you can, but without a machine, or you work as hard as you can without the access to a computer, there's only so far you're going to get. Now, I was thinking about Bitcoin and how Bitcoin plays into all this. And you can see in my chart, Bitcoin's about $400 billion of this $900 trillion worth of global wealth. You see gold is 12 trillion, and equities are 115 trillion. It used to be gold was equal to equity. If you go back 50 years, it used to be gold was about equal to equity. So what happened? Well, there's a lot of technology in equity. You know, we talk about gold being a shiny, dead rock, but think about gold mining and think about what technology has done to gold mining in 50 years. Semiconductors don't make it easier to mine gold. Mobile phones don't make it easier to mine gold. Right? What's happened in equity? Well, you've got Tesla, you've got Apple, you've got Google, you've got Amazon, you've got the internet, you've got the telephone. So technology has shifted the balance of power from gold to equity. Government policy shifting the balance of power. Look at bonds. Bonds are driven very heavily by government policy. Real estate, driven very heavily by government policy because government policy controls capital and cost of debt, and that drives real estate. And of course, there's money over here. So, most important point is the government is changing this field, technology is changing this field, and you can work as hard as you want, but you're going to have to take into account government policy and technology if you want to actually survive in this world. The world reserve currency is the dollar. It's collapsing against assets like the S&P index, like real estate, like gold, like art. And this is a sobering thought. If we had sound money, the dollar wouldn't collapse. But you've probably seen this chart. This is the dollar collapsing against consumer goods. Consumer goods, the dollar is 95% weaker. It means consumer goods are 20 times more expensive today than 100 years ago. Now, consumer goods are manufactured items, candy bars, bottles of water, Netflix videos. They're things that are coming off an assembly line and they're getting stamped out with a low variable cost. This is the cheapest, least scarce stuff in this civilization, and yet it's 20 times more expensive.
According to Saylor, global governments are currently grappling with a crisis of confidence in currencies and banks. As a result, consumers are also losing faith in fiat money. Saylor argues that money is in a state of decline, not just in countries like Venezuela and Argentina, but worldwide, including the United States and Western Europe. In his discussion, Michael delves deeper into the measurement of inflation and compares the value of the dollar to various commodities and currencies that are being devalued in relation to the dollar. Let's now return to the inflation video for further insights.
How do you measure inflation? If I measure inflation against something I can manufacture for free, inflation doesn't look that high. If I measure inflation against a yardstick that is fixed, that's thermodynamically sound, then you see the true measure of inflation. S&P is one example of that. This is Miami Beach. Miami Beach runs 96 blocks. There's that much beach. 100 years ago, there was that much beach. No amount of semiconductor technology or factories make more beach. The dollar has fallen 99.8% against the beach in 100 years. That's how you start to see what's really going on with the world's strongest currency. Now I have some bad news for you. We're not in America. We're in another country. Foreign currencies are collapsing against the dollar. This is the Argentine peso against the dollar. In 20 years, the peso goes from 1 to 500. The peso's lost 99.8% of its value against the dollar at the same time that the dollar's lost 75% of its value against the S&P index. I'll let you do the math. If you run a company in Argentina and you're going to work hard, you're going to have to grow your revenues from 1 million pesos to 500 million pesos over 20 years to stand still. And that's why I say no amount of hard work is going to solve the problem of being on the wrong side of an economic war. There's only one strategy here. You have to get out of that peso. You have to exit. This is the lira. This is before this week. It lost 95% of its value. Now the number is about 97% of its value against the dollar. This is the rupee. It's lost 90% of its value against the dollar. So that 99.8% loss is another 90%. So we're kind of running out of numbers to calculate just how much of your wealth has gone from you to the government. When the government actually collapses the currency 99.9%, what it means is over 100 years, they in essence take all of your wealth and they redistribute it to their cronies, to whoever they want. And that's the rate at which it's going. This is Pakistan, 82% against the dollar. This is the Brazilian real, 65% against the dollar. Conclusion. If you want to preserve your wealth, you have to convert that currency into an asset that's scarce, desirable, portable, durable, and maintainable. Right? There are certain things that are scarce and desirable, but they don't move, like beachfront property. And by the way, maintainable, if you own $1 million of property in Miami, you have to pay $20,000 a year, every year, to maintain it, and it gets assessed up. So you have to have $1 million to cover the taxes on $1 million of property in Miami Beach over about 20 years. You can't maintain it.
Argentina's government, facing an increasingly desperate situation, is seeking assistance from China and the IMF to prevent a currency crisis. This poses a dilemma for the IMF on how to support Argentina, which is its largest debtor. The country is grappling with high inflation, projected to reach 145% this year, and a looming recession. Additionally, the central bank's hard currency reserves are minimal, and the peso has experienced a significant decline against the US dollar on the black market. To prevent a major devaluation or hyperinflation during the politically turbulent period leading up to elections, Economy Minister Sergio Massa has implemented emergency measures. Massa plans to travel to Washington to seek additional IMF funds, but he faces challenges due to a severe drought affecting farm production and agricultural exports. Meanwhile, Turkey has made efforts to stabilize its currency, the lira, resulting in its largest drop in over a year. President Recep Tayyip Erdogan's new economic team, implementing more rational policies, has led to the lira falling to a record low against the US dollar. Investors anticipate a shift towards more orthodox measures following Erdogan's election victory, and a new central bank chief with a more orthodox economic approach may be appointed. The pace of the lira's depreciation has been swift, aligning with Goldman Sachs' forecast of a fall to 23 against the dollar within 3 months. In the midst of inflation and monetary challenges, Michael Saylor of MicroStrategy continues to advocate for Bitcoin as a way out of the crisis. He asserts that Bitcoin is a natural right, emphasizing its resilience and potential as a solution. Share your thoughts on the dollar devaluation in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.